Becoming the number one money-making social platform. Known fairly or not for thousands of creators who claim to rake in millions a year just by showing a little extra. Yeah, OnlyFans, a platform that exploded over the last few years by leaning into the kind of content most other networks ban or bury. In today's video, we're digging into the business behind OnlyFans and why so many people are willing to put themselves out there. I'm Simplified. The info here is compiled from multiple public sources. If I miss something or you've got firsthand experience, drop it in the comments. Okay, what is OnlyFans exactly? Think of it as a subscription-first creator platform. Fans pay to access exclusive content from the creators they love. It's like Netflix, but for individual personalities, and the content is usually private, behind a paywall, and often more intimate or unfiltered than you'd ever see on mainstream social media. OnlyFans launched in 2016, founded by British entrepreneur Timothy Stokely. The core idea was simple but smart. Let fans directly support creators without relying on ad dollars or big media middlemen. Creators own their relationship with supporters, set their own rules, and control their careers more tightly. Then the pandemic hit and the platform's growth went vertical. With people stuck at home, creators looking for new income, and audiences craving connection, OnlyFans turned into a rocket ship. A huge reason for that rise? Positioning. While Facebook, Instagram, and others tightened restrictions around adult or suggestive content, OnlyFans stepped into the empty lane and built a home for it. That bad reputation became a competitive moat. When other platforms said absolutely not, OnlyFans basically said, "There's a willing market, we'll handle compliance, let's go." That niche strategy proved incredibly powerful. It attracted both creators who couldn't monetize elsewhere and fans willing to pay for direct access. Now, let's be honest, OnlyFans is most famous for NSFW content, but the platform is broader than people think. You'll find fitness tips, recipes, behind-the-scenes content from public figures, makeup tutorials, wardrobe hauls, coaching, and interactive live streams. Big-name influencers use it to deliver exclusive experiences and deeper community perks you won't get on Instagram or YouTube. Still, the main draw for many subscribers is the spicier content, and that reality shaped the brand. Important caveat, not everything goes. OnlyFans has strict rules to stay on the right side of the law and payment processors bans around violence, weapons, minors, hard drugs, deepfakes or deceptive AI content, public sex acts, and more. It's not a free-for-all, it's a controlled environment built to keep the lights on and the payments flowing. Business model-wise, OnlyFans is the anti-ad network. YouTube, Instagram, Facebook, they live on advertisers. OnlyFans only makes money when creators make money. That creator-first revenue split, the platform keeps 20%, creators keep 80%, aligns incentives. If you earn, they earn. Fans aren't chasing algorithm crumbs. They're paying directly for exclusivity and access. That's the real product connection that feels personal and scarce. Psychologically, it's brilliant. Fans want closeness DMs answered, custom shoutouts, content tailored to their preferences. Creators want stability without riding the algorithm roller coaster. Subscriptions and direct paywalls deliver both. As a result, OnlyFans didn't just become another app. It became a playbook for the direct-to-fan creator economy, where intimacy is the value prop and the paywall is the engine. One more savvy move: distribution. You won't find a full-featured OnlyFans app on the Apple App Store or Google Play. That sounds like a disadvantage. Until you remember, app stores can take 15 to 30% of every in-app transaction and impose strict content rules. By avoiding that cut and the policy headaches, OnlyFans can sustain that 80-20 split and keep its operational risk lower. Less discoverability, sure, but a cleaner P&L and far fewer landmines. For a platform serving controversial content categories, that trade-off makes hard business sense. So that's the setup. A subscription platform born in 2016, turbocharged by the pandemic, positioned around content others won't touch, and monetized through direct fan payments instead of ads. Next up, we'll break down exactly how creators make money on the platform. the pricing psychology, upsells, deans, tips, custom content, and why the top 1% earns a lion's share while most people barely cover a phone bill. All right, now that we've set the stage for how OnlyFans works as a platform, let's get into the real question. How do creators actually make money on it? The backbone is subscriptions. Creators can set their own monthly price, usually anywhere between $4.99 and $49.99 per month, though most start around $7.99 or $9.99 to attract a base of fans. Many also use sales tactics like discounts for multi-month subscriptions, free trial periods, or a cheaper first month to get people hooked. Once the audience is loyal, prices can be raised gradually. Now imagine this. If you had 100,000 subscribers paying $5 a month, that's $500,000 every month. At $50 a month, it's $5 million. That's the fantasy that gets people hyped about OnlyFans. But hold that thought, we'll circle back to reality checks in a bit. Subscriptions aren't the only revenue stream. There are multiple layers of monetization. Tips. Fans can send money just to show appreciation for a picture, a video, or even just a shout out. For creators who really engage with their audience, tips can sometimes double or triple their subscription income. Pay-per-view peeve messages. This is a big one. Creators can send locked content directly to a fan's inbox. The fan has to pay to unlock it, usually anywhere from $5 to $30, depending on how premium the content is. A smart preview or teaser here makes all the difference in conversion. Custom content. This is where serious money comes in. Fans can request unique, personalized content. And because it's one of a kind, creators can charge way more. Sometimes 5 to 10 times their monthly subscription price for a single request. But there's a golden rule here. Always get paid up front and always set boundaries. Live streams and donations. Live sessions let fans interact in real time. And just like Twitch, people can tip while watching. Content bundles. Think of them like albums of past work highlight reels, themed collections, or behind-the-scenes packs. These are sold at a flat rate, similar to a digital store. Referral program. Creators can earn 5% of another creator's revenue if they refer them to the platform. Not a major income driver, but a nice bonus. So how much do creators really make? This is where the perception versus reality gap gets huge. Yes, you've heard stories of people making $100,000 a month or even millions a year. Those stories are true, but they're outliers. The average income paints a very different picture. Reports show the median creator makes only around $150 to $180 a month. That's basically $1,300 a year. Not exactly quit your job money. And the distribution follows the 80-20 rule, actually closer to 90-10 here. The top 1% of creators take home about 1/3 of all platform revenue. The top 10% take home nearly 3/4 of the total pie. Everyone else? Fighting over scraps. The bottom line is, yes, some people are crushing it, pulling in life-changing money. But for the majority, the earnings are pretty modest. And that's not surprising. OnlyFans has almost no barrier to entry. All you need is a phone and the willingness to put yourself out there. When anyone can start, competition explodes and only a tiny percentage rise above the noise. The dream that all you have to do is post and money rains down is an illusion. The ones who win treat it like a full-time business. Strategy, marketing, consistent posting, fan engagement, and stamina. In other words, you don't just cash checks for existing, you hustle hard. Coming up in part 3, we'll break down the bigger picture. What OnlyFans means for the creator economy, how its model compares with YouTube, Twitch, and Patreon, and why avoiding the App Store may have been its smartest financial move. So now we've covered the platform and the money mechanics. But what does OnlyFans actually mean for the creator economy? And how does it stack up against the big players like YouTube, Patreon, or Twitch? Here's the first thing. OnlyFans flipped the model. Traditional platforms, YouTube, Facebook, Instagram, run on ads. Advertisers pay, platforms skim a big cut, and creators fight the algorithm for scraps. That creates dependency and volatility. One algorithm tweak and your income tanks. OnlyFans said, forget ads. Let fans pay directly for access. And we'll just take 20%. Compare that to YouTube, 45% cut of ad revenue. Twitch, in some cases up to 70% cut on subs and ads. Patreon, lower fees, 5 to 12%, but stricter rules on adult content. Suddenly, OnlyFans looks pretty generous. It's not just a platform, it's a business partner aligned with the creator. If you win, they win. Another power move? Skipping the app stores. Most platforms distribute through Apple's App Store or Google Play, but those ecosystems take a brutal 15 to 30% cut on in-app purchases. By staying web-only, OnlyFans avoids that tax, protects its 80-20 revenue split, and sidesteps Apple's strict adult content policies. The trade-off is less discoverability and no native app convenience, but the financial upside is massive. For creators, that means more money in their pockets. But here's the thing, income inequality on the platform is extreme. Like we said earlier, yeesh. The top 1% make life-changing money. Some creators have built multi-million-dollar businesses. Bryce Adams, for example, reportedly pulled in nearly $10 million. But the median creator, around $150 a month. That's barely rent money. Why such a gap? Because OnlyFans is a low-barrier, high-competition game. Anyone can join, which means everyone does. Success isn't about simply posting content. It's about building a brand, marketing yourself, keeping subscribers engaged, and constantly offering more. The people who treat it like a business with strategy, storytelling, and relentless consistency are the ones who rise. And that leads us to the broader lesson. OnlyFans isn't just a platform, it's a case study. It proved that fans are willing to pay directly for exclusive, intimate access, and that creators don't have to rely on ads to survive. It turned what most people saw as a weakness, association with adult content, into a defensible niche and a billion-dollar revenue model. By 2023, OnlyFans had paid out over $20 billion to creators worldwide. That's not just a number, it's a shift in how digital labor is valued. Fans don't just want free content, they want connection. They want exclusivity, and they're willing to pay for it. So here's the takeaway. Whether you love it, hate it, or just meme about it, OnlyFans changed the game. It showed the creator economy that direct-to-fan monetization isn't just possible, it's powerful. But it also exposed the harsh reality that not everyone will win. Most creators grind for modest income, while a few dominate the spotlight. In the end, OnlyFans is a reminder that the internet rewards scarcity, intimacy, and brand power. And if you're a creator, the real question is, how do you position yourself to be in that top percentage on OnlyFans or anywhere else? I'm Simplify. If you found this breakdown helpful, hit subscribe and drop your thoughts in the comments. Would you ever pay or post on OnlyFans?